Hey everyone, John Inner here from School of Trade, and today we're going to be taking a look at a short trade here on gold. Let me just get my stop in place here. Two contracts short right now at 33.1. First target's going to come off at 29.3. Second one, if they can get that push, is going to go back down to these consolidation lows at 25.4. Now, the reason that I'm really kind of liking how this trade looks is typically when you get these big spikes up like this, you're going to either, one, consolidate, possibly even, form a little bit of a flag, something like that, or you're going to completely reverse back down to those highs, and that's what we call a spike and ledge. This is setting up more of a spike and ledge pattern. I am entering a little bit more aggressively at the highs, but you can see based across the tops here and the bottoms through here, we're entering directly on a to-the-tick test of those highs coming off of there. Now, the nice thing about it is there was a nice little bull trap of the highs, so we do have a little bit of reason to like the downside here, right back down to these lows. First of all, to recoup half of this big bursting candle, and then looking to break these lows and then come back down to a 200% extension. This is of our from our entry to our risk. Because the risk is so big on this trade, we're looking at a 40 tick risk. We're only going 2 contracts deep just because it requires a relatively large account size to trade this one with anything much more than 2 or 3 contracts. So we're short 2 contracts at 33.1. Looking at our first target at 29.3, second target, if it can push down, 25.4. Now, from our entry to that first target, we're going to be looking at taking out 38 ticks. And then from our entry to the second target, we're going to be looking at taking out 77. So this still, even though we're in 2 contracts and it's not our typical size, you're still looking at a relatively large trade at 115 ticks of the downside. So keep that in mind, because if you are able to trade more than 2 contracts with 40 ticks of risk, you can seriously make some big money on this type of trade, or at least the potential to. Now, the risk is relatively high, so that's again why we're going in a little bit small, but I'm expecting this trade to take a little while to really start moving around. It's only 7:30 or so in the morning, a little bit earlier than normal, but given that this pattern's setting up after this big spiking candle at 7 o'clock, we'll just kind of sit on hands, wait for it to complete, and start dropping down, hopefully into our first target down here within, hopefully at least by within the hour, when gold starts opening up around 8:20. So we'll be back in a little while, and we'll see if they can push it down there.
Order filled.
All right, got a big old spike down to fill our target down there at 29.3. That takes care of the first target. Let's move our stop to break even here. And actually, we can go a little bit more than that. We'll just go to 32.9. That big spike down, we're getting this kind of whippiness, again, just in the opposite direction. You see this candle right there, although not as big as this one here, you can still see that whip happening inside there where all of a sudden it just shoots down and then goes in that direction and then comes back and then shoots down again. It's just going a little bit kind of crazy. So we got that first target filled at 29.3. Now we're just looking for a full reversal back below this candle's low here, which is going to be an important level around 26.6. If we can break through that level, we'll be looking at our target down at 25.4. Because this move is so big, it might even be, we'll see when we start getting closer, but it might be better to go a couple ticks ahead of that instead of just one. We're at 25.4, the target's at 0.3, maybe going up to 0.6 will be a little bit more conservative and see if we can get that filled. Still looking at 75 ticks on the trade, and the fact that we already locked in 38, 75 puts us at 113, so it's really only a 2-tick difference. But our stop is at break even, plus a little bit here, and we'll give this some time to hopefully fall a little bit farther down, and we can get that next big spike to reclaim some of this spiking candles, move up, and we'll see if we can reclaim it back to the downside and get our target filled. All right, holy crap. Okay. Let me cancel that. I was just going to say we're coming into that spiking candles low at 26.6, so we needed to be a little bit careful. I was going to see, how it reacted there. Did it just, tag it, maybe go through it a little bit and then bounce right back up? If that was the case, may look at getting out a little bit early, but you can see a lot of people were watching that level. It dove as soon as it ticked underneath that candle's low. It dove down and filled our target even a couple more ticks. It dropped 12 ticks in under a second. Huge orders came in right there and filled us. Luckily, we moved our stop up a little bit. You can see it came down and tested that level to the tick. so it's a good thing that we moved our target up a little bit more. Overall, just a beautiful trade, just really fast. It's kind of surprising how fast that went in the overall trade. But we took 39 ticks off in the first target, one more contract off at 76, gives us 115 ticks total on the trade. So even though we were only able to go short 2 contracts, still banked over $1,000 on the trade, which is a wonderful thing. So sometimes, having that increased risk can offer some really nice reward on the trade too. That's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.